But I also have Mr. Pankaj Murarka on the line with me, and this is an important take to have in view of how markets will respond tomorrow. Pankaj, hi, Tamanna here. Markets have really been able to absorb these tariff shocks by and by because, frankly, to be honest, it's because no one's taking what Trump says seriously. And you expect that he'll say 25% one day and it'll go back to something else. But now the ferocity with which he has been filing on these tariffs and has arrived at a 50% figure right now, how do you think we'll see the market reaction tomorrow?
Well, there will be some knee-jerk reaction tomorrow, Tamanna, but all of us, as you rightly said, we know a lot of this is posturing and trying to play the hard ball to get the best deal. So, and all of us have seen how impulsive and unsophisticated gentleman the American president is. So while there could be some short-term knee-jerk reaction, I still think that there is a deal between India and US, a bilateral trade deal somewhere down the road, now in 4 weeks or 8 weeks, I'm not sure. I just want to put one more thing in context. See, there was a point of time in 1998 when India did nuclear tests and declared itself as a nuclear nation, and US imposed economic sanctions on India. At that point of time, India economy was a much smaller economy at about $400 odd billion. Yeah, we've dealt with US whenever US had dealt a tough hand with India. This is not the first time they're doing it. You've dealt with in the past. Today, Indian economy is much bigger, much larger, much more stable. So, meaning much to one's disliking, these kind of things do happen. But I think as an economy, as a country, India can still deal with it economically. And I still believe that there is a bilateral trade deal somewhere down the road, whether 4 weeks or 8 weeks, whatever the time it does take.
Yeah, I mean, that seems like the logical conclusion. And there is an important meeting in Russia, which the Americans are also happening, so maybe things will diffuse there. But having said that, Pankaj, where do you see the most impact in terms of Indian economy and Indian companies? Because we know about pharma to some extent, textiles, but do you see other sectors also getting impacted?
Well, the bigger impact of these tariffs is on labor-intensive, export-oriented industries. So, which essentially is at the forefront is textiles, gems and jewelries, which will get impacted the most because it's easier for U.S. customers to switch those orders or their buying power to some of the neighboring countries or the competing countries where tariffs are much lower. Now, if Vietnam is at 20% and India is 50%, it always makes sense for global customers, let's say like a Walmart, to source their textile from Vietnam. So to that extent, I think labor-intensive industries will get impacted much more in that sense because there, and it's easier, for these U.S. customers to, as I said, to switch to these neighboring countries.
Sure. Pankaj, Hiral on this side, we were already talking about how the FPIs would also look at such a deal because in this month itself, you've seen FPIs who've gone ahead and sold worth almost 6,000 odd crores. Do you think that the FPI sentiment also could stay weak because India's relative friend of US, beneficiary of China plus one image, is actually taking a knock now?
I still think I don't see this in any manner impacting long-term India-US relationships, and I don't see this influencing long-term investors. But yes, Hiral, you're right. When we talk about foreign flows, we also do get flows coming from ETFs, which are essentially short-term money or somewhat what we call hot money. And we could see some knee-jerk reaction and some outflows in India-driven ETFs, which can lead to some more selling for foreigners. So all of that can happen, meaning it's difficult to, really predict what happens in the next 2 or 3 days. But I think there could be some knee-jerk reaction. All I can say is the sum total impact of this on the Indian economy at the economy level is probably about 50-60 basis points. Meaningful impact, but not something which will completely dislocate Indian economy. I'm just saying, presuming a hypothetical case that we have 50% tariff, for the next 6 months, I still think India can do a 6% real GDP growth this year, despite these headwinds. Secondly, we also need to see, given the fact that India is a significant consumer and buyer of oil in international markets, what it does to oil prices, because I saw there was some initial spike in oil prices, and that could have a cascading impact on global growth as well. So I think there are many dimensions to it in that sense. And while, as I said, markets could react, have a knee-jerk reaction.